Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. I had a question come in as a request from some of our members on Discord. If you don't know, when you join as a member, you gain access to the Discord chat where we talk throughout the day and you can ask questions like this one. So it's a perfect example as to one of the ways that we use it. Here was the comment from Discord. So it was more of a suggestion, a video about how to count legs. A lot of times I hear you saying something about having had 2 or 3 legs up or down, and to me it all looks like one move. Or it just looks like a mess. I'm curious if there's a trick to it that I'm missing. So let's clarify what I mean when I say 2 or 3 legs up or anything like that. Just for reference, the concept of why these are important is discussed in the Day Trading Academy Unit 2, Chapter 10, discussing market objectives. But that's really what these typically are. They're filling market objectives. So a leg to me is any move from swing high to swing low that's at least 3 candles long. Now, before you go running to your notepad to write all of that down, as with any rule in the markets, is it set in stone? No, of course not. Much like everything else in the market, it's open to interpretation. Now, some legs are small, some legs are large, some are based on impulse, some are based on measured moves. There's so many different legs to choose from. When I'm referencing a leg, I'm almost always looking at the most obvious swings that create it. So when I'm talking about a leg, one of the easiest ways to really reference what I'm talking about is to just go over a lot of examples. One of the best ways I find for me personally, I'm a visual learner, so seeing them over and over and over again is a way that you can kind of visually see where they're at. So when I'm talking about a leg, again, first we have to determine, are we zoomed way in? Are we zoomed way out? What's the reference point here? So let's just take this point and we'll go to a random spot in the chart right there. Perfect. If I'm looking at this from a formation of a leg, there are a lot of different legs that stand out in terms of obvious, and there are some legs that are relatively questionable. As an example, we do have some very obvious smaller legs to the downside. You could be looking down like this. You could also be looking for bullish legs in the opposite direction. You've got legs going to the upside like this. But you'll notice one thing that happens a lot of times with these legs, they end up being measured moves in some degree. Now, they may not be a perfect ABCD formation or a zigzag or anything, exact in nature. Nothing is in the markets really. But that's a major objective thing to keep an eye on when you're looking at these, is a lot of times these legs are just creating an ABCD. So let's go through and break down a couple of different legs. So if I were looking at this movement down and I wanted to figure out where is it likely that I think the market is going to go, I'm going to look back and I'm going to categorize the biggest leg that I can see and the next largest leg that I can see. Those are going to be my 2 big important swings that I'm keeping an eye on. Now, there are going to be a lot of these small little bitty micro legs, and you'll see these show up all over the place. And in and of themselves, if you were to zoom into an even faster time frame, these could very easily be their own legs to the upside, which once again are creating ABCDs to the highs. So it depends on the context and the frame that you're looking at. So for me, if I wanted to find the biggest directionality of what's going on, first of all, I'm going to zoom out a little bit because I want to see what the bigger picture is. Show me the most information that we can get. From this perspective here, if we were looking at the largest legs that we have, obviously this whole gigantic thing could be one huge leg, but inside of this, it's broken down into a lot of smaller subdivisions. We can see this leg down here is very similar to this leg down here. Those would easily be considered legs because first off, they're fairly obvious when you're looking back at them. Like if the market were, let me adjust the chart here to a 750 margin, and then bump this all the way over to there. If we were creating this type of move to the downside, it's fairly obvious that this is a good leg to kind of keep our eyes on. Now, is the leg going to be, from here down? It could be. That could definitely be the leg. Now, why did I stop there? Well, this whole thing could be one big leg. We just talked about that. But I stopped here because this is what I would consider the first one that we're going to talk about, which is an impulse leg. So an impulse leg is, as it sounds, and just like we talk about with impulse POCs and order flow, it's from the top to the bottom. That's how the market responded, the biggest move from top to bottom. There can be extra legs to the downside, but the impulse straight move all the way down, that's the one that I'm looking at. And a lot of times these will show up later in time when the market starts racing away again. So when the market's in here, this is a really gross situation where we're obviously not doing this, so we're kind of consolidating. But when the market starts breaking away, bear bar, bear bar, bear bar, I'm starting to think, well, wait a minute, where is this market possibly wanting to go? And that's really where we can use these impulse movements as far as measured moves are concerned. When we've got this big bear spike and bear bar, bear bar, bear bar all the way down, we can use that as a measurement to then find the next time where we have a large sequence of bear bars, and that will usually give us an idea as to where the market wants to go. And this would be a great example of a two-legged move to the downside. Now, they're not necessarily always inside of moves or impulse legs. They can also be other types of legs as well. Let's get rid of some of these and change this back to normal here so it's a bit easier to navigate. So let's just take right here. This is a really good example of, depending on the scale or the degree of which you are trying to find out the swing to find these levels, you could be looking at technically this whole thing. This might be one gigantic leg, and that may be looking for a measured leg back to the downside if it wants to continue a little further. Now, within those larger legs, we can easily find a ton of different other measured moves as well. So if we're looking at different legs, one of the more common ones that I'll talk pretty frequently about is when you break a channel, you usually get one or two legs to a new high. What I mean by that is, if we zoom back a little bit and look at more of the micro scale, say, let's just, I don't know, start from here, and we work our way up from the bottom, and we have a continuation. With this channel, when we break this channel, meaning that it breaks below the low but doesn't break below the overall low, it should have 1 to 2 legs to the upside. Now, in this case, 2 legs was actually considered kind of this, and that's really not, I don't know, that's not really good enough for me. To me, this would be one where I would look back and say, well, that's probably just 1 leg. But, you know, as it stands, 1 to 2 legs back to the upside, pretty straightforward. The other consideration would be that this might already be 2 legs back to a new high. It's just we're a bit late to the party, right? Remember, these measured moves can start a bit earlier too. So if we take that earlier leg and we scoot it over, we can see that this is the 2-legged correction back. It's just doing it in a slightly different way than we would normally anticipate. Another good example of the way that these can kind of internally move. And again, these will show up all over the place. There's another dive down from the top to the bottom that would be looking for a continuation lower. Once they surpass that zone, then realistically, that's kind of the icing on the cake. It's not likely going to continue further, although it can. And you'll notice after it blows off, a lot of people get greedy, right? They hang on, they try to get the runners, and it backs all the way up. Where did it come back to? Came right back to that point of interest where the measured move was completed. They realize, wait a minute, I shouldn't have gotten greedy. Maybe I should take profit here and call it a day. So that's another type of move. And again, all of these different legs can be subdivided into one another. They can become larger, but typically they're describing some type of action that I'm looking to expect. So with a continuation to the upside, one of the best moves against a bull trend would be a 2-legged pullback, right? Now, that could be 2 legs in the sense of, you know, much wider like this, or it could be 2 legs in the sense of maybe here. That fits a lot nicer, if you ask me. I think that's a little bit nicer. And what's interesting is this isn't the first time that happened. If we look back, it actually happened over here. It gave you a clue of what was coming a little bit later. Almost perfect bounce and a little bit shallow ahead of it. So these types of moves, and that was an impulse one, just so you know, these show up all over the place. And when we start hitting these areas, it could be a really good clue that the market's getting ready to turn. Now, is that the only reason to jump into a trade when a leg is completed or anything like that, or jump out of a trade after a leg is finished? No, of course not. There has to be other reasons. But it's a big clue where if you start pushing past that area, it's going to have a harder and harder and harder time to keep going. Now, again, this is all in the eye of the beholder, right? So you may look at this and see a totally different picture in terms of swings than I do. But if I were to go across this from swing high to swing low, as far as the ones that stand out to me, so maybe it helps you kind of understand how my brain works, I see from swing low to swing high, and we'll just start here. From the move back down, move up, continuation down. We have a new reversal down to a new low that attempted to go lower, but failed to make a new low, meaning that that doesn't actually exist there, and we have to go backward a little bit and assume that this was all just a correction back up. Confirmed swings, good old confirmed swings. Back to the downside, back to the upside, but again, they don't necessarily hit the highs. That doesn't mean that I'm going to not count that as a leg. That's big enough where it fits. As long as it's fitting the bill with generally the scope that I'm looking at or the degree that I'm looking at. You can see I'm not looking at all of these little individual tiny swings. But here's the thing. You can, right? It's just like Elliott wave or market structure. They're all subdividable. You can zoom in closer. You can zoom out farther. We can go way out here, and we can find just as many measured moves as we can zooming in way over here and looking at it internally. It gives us the exact same thing because a market is a market is a market. They're all subdividable down until you get to a point where there's not much of a market left, like a 1 second chart, right? That might be a little bit more difficult to find, but even there, you're still going to see it happen. So when I'm looking at legs, they're more of a way to kind of anticipate what's going on and have an expectation, if you will. But there are a lot of different ways to look at them. And again, it is in the eye of the beholder. You will see it differently than I will see it, than everybody else will see it. But generally speaking, it's a way to kind of gauge where the market's at and when we might be hitting a spot that could cause some problems. If I were in a position that I might want to be exiting, when we start hitting into these areas, that's a really great excuse to start exiting. Hopefully that clarifies what I mean by a leg, because it can be a lot of different things. And again, context is everything, as we say. But if you have any other questions, feel free to drop those in the comments below or in the Discord chat like we got this one from. And of course, if you have a more detailed question that needs some heavier answering, you can shoot me an email, jhb@ssftg.com. Until the next one, we'll talk to y'all then. Thanks.